So I just wanted to do a bit of a more of a deep dive into MSTR. I think for myself and my audience, I haven't done a ton of research on that front, just more on Bitcoin. So I wanted to talk to Forrest, ask him some questions about some cool stuff he's doing and research as well. So do you want to do a quick intro?
Yeah, sure, man. I'm stoked to get into it. Yeah, we've done a little bit before. My channel is Bitcoin, not crypto. I talk about MSTR a lot on there, and I've done a lot of deep dives on it. So I'm happy to answer any questions you have about strategy. Yeah, we'll just get into it.
Cool. So start with kind of what got you into strategy and like what interests you and keeps you wanting to dive further into it as opposed to just doing Bitcoin content.
Yeah, so strategy initially was interesting to me. I think I started making videos about it last maybe September or October of 2024. So it was prior to a huge run up that happened. But it was my interest in it was at first Saylor, right? Michael Saylor's the chairman of the board there at Strategy. He was a co-founder and CEO for a long time. And he's a Bitcoiner, and a very influential character in the Bitcoin scene. He's had some great podcast appearances and very eloquent the way he talks about money and the future potential of Bitcoin and what Bitcoin is. So from that introduction, I got interested in looking into what his company did. And essentially what strategy does is they buy Bitcoin. That's their strategy, right?
Yeah.
And that doesn't mean that's the only thing they're going to do. But right now, they're, in my opinion, in their accumulation phase. So they're doing as much as they possibly can to acquire as much Bitcoin as possible because they understand what Bitcoin is fundamentally. And they understand that by having a lot of Bitcoin, that will allow them to do whatever they want in the future. That is fairly unclear what they decide to do with that Bitcoin, but they'll be able to do, again, whatever they want because they have so much of it. And because I think what they think and what I think is that Bitcoin will be the base layer money underlying a new financial system. Which it already is, right? Bitcoin is already a financial system outside of the system we have now. But what will happen is that financial system will grow, and the one we're using now will start shifting over into Bitcoin, into the Bitcoin network. As we can see, that's already proven and true, although it's still small as of now. So I think my interest in it was just that looking into what they were doing and seeing that if what they were doing was successful, that they were incredibly undervalued.
Yeah.
And I'm an investor. I'm looking for investments, and that's what led me to Bitcoin. Was trying to protect my money, trying to grow my money, my purchasing power over time, trying to escape inflation, trying to protect myself against that. That's what led me to Bitcoin, and that led me to strategy. And what keeps me interested in it is that it is the combination of you have to understand Bitcoin, and then additionally you have to understand financial markets and the capital structure and financial instruments and really just the financial system in general to understand what strategy is. And so it's more of a intellectual it's intellectually interesting beyond what Bitcoin is, right? I find them both intellectually interesting, but it's on top of Bitcoin.
Yeah. I think that leads well into my second question, which was just what kind of investor or Bitcoiner do you think is right for MSTR? Because whether it's someone who's a no coiner, maybe they shouldn't be looking into a MSTR investment, or traditional investors that are very knowledgeable about the space. Like, do you think you have to have a foundational knowledge of Bitcoin, or what kind of person do you think is right to look into it?
I think if you don't have a financial if you don't have a deep understanding of Bitcoin, I think you'll get spooked out of strategy because it's it's the volatility of Bitcoin plus. So that shifts. The volatility shifts depending on what's happening, what they do, right? It's, Bitcoin already is mispriced, and that means that it's volatile, right? There's people that think it's worth nothing, there's people that think it's worth $1 million, and there's everybody in between, and that creates a market that's very volatile. And then on top of that, you don't know day to day, week to week, what strategy is going to do. So then there's the additional volatility of the company's management. So I do think, I've asked myself this same question, and I do think that there are people that get into strategy because they're TradFi and they see this as Bitcoin exposure, maybe leverage Bitcoin exposure. And then they start to see, oh, well, if they held it at certain periods of time, they could see percent gain or something crazy like that, just on the underlying common stock. And then they think, okay, why is it doing this? I mean, I know they hold Bitcoin, but why is Bitcoin doing this, right? So I think it could actually lead people to Bitcoin, which is interesting. But with that volatility comes volatility is a byproduct of risk, right? So there's additional risk by holding strategy because you don't know what they're going to do, because it isn't a bearer instrument like Bitcoin. They hold it in a third party custodial fashion. So there's all sorts of risk that you take on additionally by investing in strategy. And I'm not alone with saying this, but there's other people that have said, I treat Bitcoin as savings and I treat strategy as investing. And I think that's a pretty decent way to look at it. And so you should kind of think about who you are as an investor, think about what your education is about Bitcoin. And for me personally, I would 100% own Bitcoin before strategy, because again, you're taking on additional risk and there's a lot of unknowns and variables that could play out, good or bad, right? But a lot of people just see strategy as like, oh, this is, they actually see it a lot of how maybe people used to or still do to some degree look at altcoins. They think, well, I can jump on this faster horse and eventually I'll sell it after it outperforms Bitcoin and buy Bitcoin with it. So there's some really, it's a really interesting dynamic. And I think potentially why this alt season, all these crypto people are waiting for has maybe been a little bit delayed, is because people are just treating these Bitcoin proxies as their new altcoins, so their new faster horse trading, and many of them will lose out because they do that. But I think I never recommend strategy to anybody. I think it's intellectually incredibly interesting, and for each individual to look into deeper if they think that's something interesting to them. But I do recommend Bitcoin because I think that if you look at what strategy is doing, all they're doing is buying Bitcoin, right? And you might as well do what they're doing to begin with, and then maybe think of, again, strategy as a riskier play, an investment in that kind of realm.
Yeah.
Hopefully that answers your question.
Yeah, it's definitely a good explanation. I've tried to explain MSTR to people that don't fully get Bitcoin, and it's just like white noise pretty much. It's pretty hard to explain if you don't already have that foundational knowledge. But yeah, along with that, so say someone's, just the Bitcoiner, and for some kind of strategy investing in MSTR, do you see it as something where you think you'll eventually take all of that into Bitcoin? Do you see it as something more long term, or something that's just going to kind of create income in the short term, like to help you exist in the fiat world? Or what do you think like the ideal strategy is for a Bitcoiner accumulating MSTR?
Yeah, I don't know if there is an ideal strategy, especially into the future, right? The future is uncertain, and personal finance is personal. So it's really difficult to talk about what other people should do. But with all of that being said, there is a big difference between Bitcoin and strategy. And that difference is the lending products. If you're not trying to sell your Bitcoin, if you're trying to maybe live off of that Bitcoin, the lending products for Bitcoin are extremely limited, maybe risky in certain cases. There's been a lot of historical problems with that. However, if you hold strategy, it's a equity, and you can hold that in a margin account, and you could take out margin on that. You could write covered calls on it and generate income that way. There's even a covered call strategy that basically does that. They do what's called a poor man's covered call. So they buy long dated options and they sell covered call shorter dated options against that. And you get the premium from that strategy. So there's different ways of generating yield from these products. And yield is kind of a bad word in the Bitcoin space, but
Yeah.
it's a lot of people are looking at ways to not sell their equity, right? Or their assets. So I think strategy is ultimately going to move in a very similar direction to Bitcoin. So in a bull run, that could be great, and historically it has been great. It's outperformed Bitcoin. Now, what happens in a bear market? We've seen a past bear market with strategy. There's maybe a little bit of nuance there because they didn't have as much Bitcoin as they have now. There was different situations. It was a little bit uncertain, but it underperformed Bitcoin, right? It went down faster. And that's because a lot of people treat it as a levered play on Bitcoin. And that's because they take out a certain amount of debt to buy Bitcoin. They have, these preferred shares attached to them, which they have to pay a dividend on. So there's additional risk on that, which you would expect a downside, an increased downside compared to the underlying asset, which is Bitcoin. I think a lot of people though are doing that strategy of buying MSTR and then selling it what they believe would be a top, and putting some of that into Bitcoin. I think that could be a strategy that works. I think a lot of people underestimate how difficult it is to time the market, and they think they're a lot better at it than they are. And I'm definitely guilty of that. I own MSTR, but I also own MSTR options, which I've allowed to go incredibly negative and then incredibly positive, and then round tripped it back down to break even. And it's like, I should have sold those options at 300% up, but I think it could go a little bit higher and a little bit longer and all these things, right? So it's again a riskier play, and most people are better off just buying Bitcoin. That's for sure.
Yeah. Then I was gonna ask about like MSTX, MSTU, MSTY, just like maybe a brief overview of those, and kind of like if any of those, how do you find like which one of those is right for the investor? And because it can be overwhelming with all the different options out there.
Yeah, so these are derivatives that use some sort of exposure to MSTR. So MSTX and MSTU, you could kind of bundle together. They might have slightly different strategies, but what they try to do is emulate a daily 2x of the move of strategy stock. So if strategy goes up 10%, theoretically, they're supposed to go up 20%. If strategy goes down 10%, they're going to go down 20, or sorry, if strategy goes down 10%, they're going to go down 20%. So they double the moves. When you open yourself up to these leverage products, you have I can never remember what it's called, but it's essentially a decay that happens with the percentage, because a 20% up move after a 20% down move doesn't bring you back to even, because you're starting at a lower price with the up move after it's gone down. So what that does is it kind of grinds down the exact replication, and these things are rebalanced every single day, so you don't get an exact double move with these products. They also potentially open themselves up to different types of decay beyond that, depending on they often do these swaps and different financial strategies to get the 2x leverage, and occasionally they have to do options as well to get that 2x, and they'll open themselves up to theta decay. So if you look at the way they track, they do a pretty good job at 2x, but if you look at a longer time frame, they'll probably do a little bit less than 2x overall. And again, strategy is already super volatile. So if you're adding 2x to that and it goes down just because, you timed the market incorrectly, you could be looking at a very quick loss on paper of like 40, 50, 60% down, which could just emotionally, you might not be ready for, for that negative position on your portfolio. So a lot of these products are really designed, those two products are really designed for day traders or for at most like a couple of days. And you should probably use them in that way if you're a sophisticated trader. So again, just very, very risky product. Not a totally useless product, not a product to fully avoid, but just a product to be aware of what it is and to be cautious using. And MSTY is, the Y stands for wield, or wield, stands for yield.
Yeah.
So to explain it again, it's a poor man's covered call. So they buy long dated options, they sell short dated options, which are have more theta decay against them, and the volatility potentially goes against them in that way. I think MSTY is the investor that would want MSTY would be somebody that maybe is retired or supplementing their income and they don't know how to do covered call strategies themselves, or they are not confident enough to do that, or they're okay, or they don't want to do that, or they think that the managers at I think it's Yield Max does the MSTY. They think they could do a better job. So they pay out monthly, they pay out dividends. And part of those dividends, people should know, is a return of capital, which means that the net asset value, the assets under management, actually gets part of it gets returned to the shareholders of those ETFs. So you might see these massive dividend payouts and think, oh, wow, that's incredible. I could retire on this. Just know that the fund is actually like your share of the fund is getting lessened. So if you were to try to do this properly, to keep the ratio of your investment the same in those shares, you would actually have to reinvest a portion of that, which a lot of people do with MSTY anyway, because they want to build that income generating product up so that they could get more monthly payments. So that a lot of people reinvest their dividends anyway. But historically, again, if you even calculate in the dividend payments from MSTY, this strategy has underperformed the underlying MSTR, and you'd be better off. I know this sounds crazy, but you'd be better off buying the underlying and actually selling a couple shares, not even covered calls, just selling shares as you needed to. And you would outperform MSTY. This isn't always going to be the case, but in a downturn, if we go into a bear market or something like that, or MSTR has some sort of downturn, the poor man covered call is going to go against them really fast. And I think MSTY would underperform really quite a lot in that, even though a covered call strategy can hedge in a downturn. Doesn't mean you're going to save yourself by selling covered calls, but it can help because you're getting that premium as it's going down. So it's offsetting a little bit of the negative price movement. But with a poor man's covered call strategy, that's not going to be the case. There's no amount of covered calls you could sell against that option to really offset it, because it's a leveraged play, because it's an option as opposed to the underlying shares. So hopefully that explains those three products. They're all quite interesting and might be right for certain investors depending on their situation.
Then let's go into a little bit of more of the fundamentals and how MSTR is actually able to accumulate so much Bitcoin and how that strategy will evolve moving forward.
Sure. Yeah. I'd like to tell the whole history of it even, and I'll kind of blaze through it a little bit. But when they initially decided to adopt Bitcoin as a treasury reserve asset, they put half of their capital into Bitcoin, and the other half they did stock buybacks, allowing the investors that didn't agree with this new strategy of them buying Bitcoin to have an exit, right? So they bought the shares from these investors that didn't want anything to do with Bitcoin. Turns out that wasn't really that necessary, and they just continued buying Bitcoin. So this was because they had a semi-profitable business intelligence software business for, since before the .com bubble. So they had all this cash on reserves, and the cash on in a balance sheet is like a melting ice cube. You forced to basically buy maybe bonds as like because you might need access to those funds, so you want something semi-liquid. You have lending requirements, and bonds perform well with those requirements. So typically that's what treasury departments are. They're incredibly boring departments within a company. They're buying a lot of bonds, and they're making a negative real rate of return. So they're actually losing money. So cash reserves are not a good thing to have on a business. Typically, you want something in case something goes wrong and all this, but that's just a quick summary of that. Throughout the years, however, Strategy has implemented not just their cash flow to buy Bitcoin, but they've implemented and wrapped Bitcoin in products. So I actually look at MSTR as a form of wrapped Bitcoin, because there's people that can't buy a different form of wrapped Bitcoin like IBIT, right? IBIT is a wrapped Bitcoin. Maybe they don't even have access to an exchange where they could buy Bitcoin directly. So they're forced, or their only option if they want Bitcoin exposure is to buy MicroStrategy. So that's definitely a case out there. Now, what Strategy has done beyond that is there's different financial instruments that you can create as a corporation. So one of them that Strategy is very famous for is their convertible bonds. Now, what a convertible bond is, it's a debt instrument, and it has a convert clause in it, so it's like a very long dated option, basically, where the bond can convert into common shares. And with these bonds, they've been able to get 0% interest rate. I think their average interest rate on these convertible bonds is like 0.6%. Annually, so they're paying very little money to issue these bonds, and they're bringing all that capital to the moment, and immediately upon receiving that capital, they're buying Bitcoin with it. And so you might think, okay, well, convertible bonds, if they convert into shares, that's added dilution to the common shareholder. And it is, but what they're able to do with this strategy is they're able to, even with the dilution of the convertible shares converting into common, they're still able to increase the Bitcoin per share. So it's a term people have created called accretive dilution, because usually dilution is a terrible word in the financial market because it means that company's raising cash, they might be in trouble. Either way, there's more shares being issued, and so your amount of ownership of that company, if you're a shareholder, goes down because there's new shares being issued. However, with the dilution, you're still getting more Bitcoin per share. So another KPI they have is Bitcoin yield. So this is something that increases over time with the financial wrapped products that they're selling into the market, and they're able to raise the Bitcoin yield per year. So that kind of gets down to why you might want to own Strategy over Bitcoin, or the argument for it is that if they're able to, last year they were able to increase their Bitcoin yield per share, fully diluted share, by 75%. So for an easy calculation, if they were able to do it by 100%, it would take 1 year for you to get twice as much Bitcoin than you were initially allocated to when you first bought MicroStrategy shares. Now they're aiming for 15% Bitcoin yield this year, and I think they'll easily double that or more. They're undershooting their forward guidance, in my opinion. Another thing they can do is they can sell shares directly into the market, and when there's a premium on their shares compared to their Bitcoin holdings, they're essentially able to sell the difference of that premium and acquire that difference and add that to the Bitcoin per share again. So it's a little bit complicated for people that have never heard this before, or they might think, okay, well, they're just like diluting people to raise money to buy Bitcoin, and when they buy more Bitcoin, if Bitcoin's price goes up, then the share price goes up, and then if the share price goes up, these strategies they have even become more effective. So it's also a term that people have talked about is the flywheel effect. So it's do one action that improves the other action that they do, and it becomes this flywheel. Other people have talked about infinite money glitch, which is just not the case, right? These strategies only work until they don't, and by the time they don't, strategy will have developed share as well. So that's got to be your belief if you're a long-term shareholder, is that they'll continue to acquire more Bitcoin, and that Bitcoin will be accretive to you as a shareholder. And if you believe in Bitcoin, you want more Bitcoin, and you're basically hiring strategy to acquire more Bitcoin for you.
Okay. So then I'm just like trying to understand like the flywheel. So MicroStrategy, say they sell $100,000 worth of convertible bonds to company A. And so basically company A is buying this bond that has what you said 0.6% interest paid back to them.
Sure, on average, yeah.
Yeah.
They're even issuing 0% ones at this point, but yeah.
Okay. So then MSTR uses the money from that sale and then uses that to buy the Bitcoin directly.
Correct. Yes. And so what that does is that raises the amount of Bitcoin they have, which raises the value of strategy as a company,
Mm-hmm.
because when you're evaluating what that company is, you're evaluating based on their Bitcoin holdings.
Okay.
And the other thing that maybe we should get into here is how can a company issue a bond with 0%, right?
Yeah.
It seems crazy. Why would you want debt that doesn't pay you anything? It's because of that convertible clause in there. So what happens is somebody is buying this bond. Okay, so there's a couple things. There's captive markets out there. So there's certain financial institutions, maybe pension funds, all sorts of different institutions out there where they have a mandate that they can only buy convertible bonds. So they could buy convertible bonds of company A or company B and get 1, 2, 3%. And then there's a conversion premium on the underlying share price as well. So the reason that a company would, or one of these financial institutes would want to buy strategy bond, convertible bonds at a 0% is because the conversion price in there, and they can do something called delta hedging, which means they short the option that they have in the bond. They can short it with MSTR shares, and depending on the price movements, they can buy back those shares at lower prices, and they can short the stock when the volatility's gone up. And all of that is being protected by their ownership of that convertible bond that will exercise into common shares at some point. And the convertible price of this, so say they're like 33%, or some of them are even higher than what the shares are at that point of convertible bond issuance. So it's like buying an out of the money call option, basically, with a bond attached to it. And there's other reasons to own bonds as well. And there's reasons why these financial institutes are only able to buy convertible bonds, is because bonds give you seniorage to the common stock. So if something was to happen to the company, you could get paid back, even if the company, like, say, went bankrupt or something like that. So there's kind of reasons for all of there's reasons why those terms seem so favorable to strategy. And those bonds have performed incredibly well. I think all of them, but now 2 tranches are eligible for early conversion because they've gone way past the conversion price that they had when they were issued, because strategy's underlying share price has performed so well.
Okay, interesting. And then, so do you see any other companies attempting to replicate MicroStrategy's Bitcoin strategy? And is there ever like fertile ground? Like, would there be any reason at this point for someone to look at another Bitcoin treasury company over MSTR?
As an investor, yeah, Yeah, I mean, there is potential reason. There's kind of a reason for strategy to have a kind of a moat as well. They're kind of the most pure play of Bitcoin. Their business intelligence company, software company, is only just profitable at this point and is a very small portion of maybe it's like people have been valuing the business side of it at maybe 1 billion.
Oh,
So a large part of the premium or of their market cap is just the Bitcoin strategy. It's not the business connected to it, the business intelligence company that they also have. So it's very pure Bitcoin signal, and which means that it's incredibly volatile, and it has that increased volatility on top of it as well. And an options market has really formed around strategy. So there's the options market is as big as the market cap of strategy. It's incredibly liquid. If you look at some of these metrics, I think their options market or like their volume of options trading is in the top 10 every single day. A tiny company compared to the other companies that are in there, right? Or the other equities that are in there. There's S&P 500 ETF is one of the highest traded ones as well. But so is like Google, Amazon, Microsoft, Apple, Nvidia. These very valuable to have. And when you're an options trader, your liquidity within an options market is incredibly important, because if there's a lack of liquidity, the spreads between bid and ask or buying and selling are going to eat up your profit margin if you're selling these options or buying these options back or anything like that. Companies have the same amount of options volume as strategy. So that options volume is, so if you look at these smaller companies, these newer companies that have adopted a Bitcoin treasury market or Bitcoin treasury strategy, their options market is going to be a lot thinner. There's going to be a lot less volume on them. Every single company that's adopted it so far has been smaller than strategy. You could maybe argue Tesla,
yeah, yeah,
I mean, but they haven't really adopted a Bitcoin treasury strategy.
hmm,
They've just bought in some Bitcoin,
yeah,
which is cool. It's great. But it's not a large portion of how people value that company. Um, and that's kind of the case with the other ones too. Like if you look at Semler, there's people aren't really evaluating. I mean, they do have an evaluation based on their Bitcoin holdings, but they also have a medical business that has its ups and downs. And this is kind of in the same breath of how people talk about these companies. They talk about MSTR, and the kind of probably the other one they talk about is Semler. So that would be a good comparison. The options market is very thin. The company's market cap's very small, and you can actually see that they had a huge drawdown, and it was because of a DOJ, Department of what is that? DOJ, Department of
justice.
Justice. Yeah, they had an investigation into the company or something like that, and
Mhm,
the stock tanked, right? So um, MicroStrategy is going to be a lot more connected to what happens with Bitcoin, right? They don't, if something happens to their business intelligence software company, it's really not going to affect the price very much. So and that's what I mean by it's a lot more pure signal,
mhm,
because it's a lot more just what's going on with Bitcoin. Um, you could argue, I mean, Metaplanet has outperformed strategy last year. It's the best performing stock, I think, in the world
mhm,
last year. So, and their Bitcoin yield is a lot larger because their base of Bitcoin that they hold was a lot smaller. And they're getting into the different financial products that strategy is already doing in size, like convertibles and different bond products. And Japan's market is a little bit starved for volatility. It's a little bit starved for performance, and it's definitely starved for Bitcoin, because Metaplanet is really the only Bitcoin treasury company in the Japanese market. So there's maybe a little bit of arbitrage there. There's a little bit of things you could do. I mean, I think even Mara, right? Mara is another one. Marathon Digital Holdings. They have a big hodl of Bitcoin and the hodl strategy as well. So they're able to acquire Bitcoin pretty reasonably through their mining operations. They've
mhm,
also done convertible bonds. So that's maybe another thing you could look at. But mining is a very capex heavy business that takes a long time to pay off. It's a very competitive business. Hash rate goes up. They make less. there's the halving in a few years now, right? And that's going to take another hit to them. So really, it's like all of that gets priced into the equity, right? So again, less pure of a signal than strategy. So you could make arguments for all of these other Bitcoin treasury companies. And the argument you could make the best of is not that they're going to outperform strategy, but they're going to outperform their peers by holding Bitcoin on their treasury company as their treasury reserve. So that is really the argument to make. And that's why we're seeing a lot of them. It's almost like every week now we hear about a new treasury company come out. Today we just heard about one that's listed in the Brazilian stock exchange. So it's happening all the time, and they're seeing huge, massive gains because they adopt these strategies, and it's inevitable. It's inevitable, like that all companies are going to be buying Bitcoin because it will become the reserve capital and then the reserve money after that, in my opinion.
Yeah, for sure. I think that's about most of the questions I had. A little bit of a fun one. I know price predictions are a little taboo in the Bitcoin space, but do you have any, or like along with different Bitcoin prices, do you think about that much, or do you try to stay away from that?
I try to stay away from it because I read my comments, and I've made price predictions before, and I just say, hey, it could hit this based on these things. It's a price prediction. Take it how you will. And then people are saying, hey, what about this price prediction? It's like,
Yeah.
What?
Yeah.
What are you talking about? I always say, like, don't copy trade anybody. It's personal finance. As I mentioned earlier, it should be personal to you. I'm not a financial advisor, and I'm not financially advising you as an individual. So, but a price prediction is a price prediction. It's just a guess at the future based on some estimates or some idea of what you might see happening. Strategy is a very hard thing to give a price prediction of, because it depends a lot on being able to dilute. And again, that's accretive dilution to the Bitcoin underneath. But that also means potential share price slowdown on uptrends. So it's very hard to predict. It's easier maybe to predict market cap with strategy. And I think it's not unreasonable within 10 years for strategy to be in the top 10 of market caps. And those market caps will be way higher than they are now because of inflation and monetary debasement. But maybe I could definitely see that. Yeah, maybe. Yeah, definitely. Maybe. And who knows what the share price is at that point? I mean, it's definitely higher than it is today, even with they can't dilute enough to keep it the share price as it is now. And it wouldn't be that wouldn't be what they want anyway, because they need volatility within the share price. That's part of what they're selling with these convertible bonds and with their options market that is so liquid. So yeah, it's very difficult. But and Bitcoin, again, my price prediction is that it's going to be all over the place, and that you should buy it at all the time, anytime you can. And that when it's lower, you should maybe try to think about buying more of it if you can. And when it's higher, you should still buy. I mean, if you can buy Bitcoin with fiat, then it's still cheap, because there's going to be a time where you're going to have to exchange goods and services for it. And it will be the denominator. It will be what prices those goods and services and energy and gold and all of this. It won't be the US dollar. It'll be Bitcoin. So until that happens, Bitcoin is cheap. And there's going to be times where it's a little bit cheaper. There's going to be times where it's a little more expensive. And I have no idea when that's going to be.
There's never a bad time to exchange something that can be created out of thin air for something that can't.
Well said, man. Yeah.
So I think that's about all I had, unless there was anything else you had.
I think that's good. If you guys did have any other questions, I have made a lot of strategy content on my YouTube channel, which is Bitcoin Not Crypto. You can hop over there. I've made very specific videos about each one of these topics. So I've talked about what a convertible bond is in depth, and the accretive dilution part, all sorts of different things. So you can check that out. I should probably put a playlist together just of the strategy content.
Yeah, I need to check those out. I still got a lot of research to do.
Well, there's a lot to learn. Yeah, there's a lot to learn for sure.
All right. Well, I appreciate you taking the time and talking to me about strategy.
Awesome. Thanks, Josh, for having me on.
Yeah.